Most individuals, in my opinion, have no clue what is about to follow for XRP. You folks included here. Words from someone who got it right, will come to me, Tommy Lee. He was discussing technology shares. He was discussing how, given all the uncertainties in the markets, the economy was probably going to steamroll ahead. So he's going to offer some additional really crucial insights after naturally a really wonderful recovery from the crypto market, stock work and everything, and what's probably going to happen after all of this. I have to admit, his incredibly great analysis will surely benefit many of you present here now. We're going to explore it thoroughly and make sure you all know how I'm using this, how Tom Lee is using this, and what many others are doing today to guarantee their financial future is being set up. Given that, kindly read the disclaimers, not financial counsel. Press the like button to let everyone know. Let's find out what Tom Lee has to say. But Tom, what did you notice that seemingly so many others overlooked? I believed we were heading to zero. Brian, well, and zero is always a possibility, but I believe it boils down to three factors. The first is that the high-yield market never validated the economist-induced concern regarding the economy. High-yield spreads did widen to about 439 basis points wide, but if we were barreling into a recession, they'd reach about 700. They're back down to around 360. The second is that, as you say, the stock market did have a liquidation event. However, waterfall declines, 17 out of 18 since 1950, all of them had a V-shaped recovery. We therefore understood that the bottom would be a V-shape whenever it was set. Jackson Hole made February 2022 the lone genuine exception. The third is that we had great confidence in companies. You know, these firms have been battle-tested. They withstood a closure brought on by a pandemic. They withstood a bullwhip impact from a recovery. They withstood the quickest rate increases ever recorded. Therefore, I believe companies truly deserve praise. Given the Armageddon we anticipated, they have produced profits even for Q1 and for advice that has been far better. Those three factors, therefore, are what we believe led us to advise our customers to sort of buckle down and perhaps increase exposure. You know, Kelly, I did something I rarely never do. I deleted it too because I tweeted out. About that time, I was like, you're not really losing money considering that tweet. Go. And I meant it, ruined it. Not me. I ought to have. But I meant that, Tom, as a reference to this show that was shown on another network claiming retirees are being wiped out. It annoyed me. I tweeted out, individuals got a hold of it and took this life itself. My point, though, was that unless you're retiring in a few months or a year, whatever, or you're 80 years or whatever it would be, it's better to be in the market for a long time than to attempt to time the market. Is that right? I mean, that's one thing if you're a trader or hedge fund. The prejudice is obviously to the upside if you are a longer-term investor with a greater than 5-year horizon. But I believe we do, since the sell-off was so politically driven, it sort of took on a life of its own. Do you think so? Certainly. Well, several things are in play. We were stressing it throughout the tariff disruption, but we know that more than 60% of the equities professional universe of investors, looking at political surveys, are Democratic-leaning. Their reading of the White House's activities was half empty. This meant we observed an exaggerated equity move in relation to the bond market. In fact, the bond market has flipped. Among fixed income managers, 60% are registered Republicans. That's why, at least in this case, I believe you receive greater signal from what the bond market was doing. The second is, naturally, something individuals have discussed. The 10 best days. You know, we were stressing this several times, that the S&P only returned 3% a year each of those years. If you exclude the 10 greatest days of 2023 or the 10 best days of 2024. As you say, you must remain in the market to obtain the 20% increases. This year, in my opinion, is again another illustration of individuals' range sold at $48.35. Now they are purchasing in today. They lost 1,000 points, or 20 percentage points, of a gain in 2025. Do you have any ideas on any sort of bond yields that these levels touch? Is it significant? I mean, just sort of picking up on what we were just talking about. What do you say now for those who missed and hoped they had piled in at the lows now a month ago? That no one now wants to go, okay, you know, I'm going to act now. Equities are currently back at the peaks. Perhaps we then drop down once more. Therefore, some sort of generic counsel. Certainly, I have a few suggestions. I mean, at 4%, the 10-year yield isn't really much of a problem, not only for the government, but also for the economy or for businesses right now. Therefore, in my opinion, it is a degree of financing that companies might profit on capital. Then, considering 2026, much to be thrilled about, deregulation is approaching. The tariff disaster is behind us. We might have tax cuts. Then we could have improved commerce and alliances with other nations, which would allow US businesses to profit more. The market is flat year to date through May, hence I don't believe anyone should feel as though they missed anything. I believe they will have an opportunity to purchase several businesses. Many equities were destroyed. I believe these washed-out names, nevertheless, present chances. When we discuss it with our customers, you know, whether it's Tesla or the Mag 7, certainly, or the tiny caps, there are still lots of chances. But certainly. Tom Lee makes several fantastic comments there. What really struck me, though, was how he mentioned approximately 20 days' worth of price movement in the stock and cryptocurrency markets. Trying to time the market excessively will almost certainly cause you to lose those profits. That's why I believe, particularly in times like now, long-term holding for XRP crypto is vitally vital. That said, clearly the economy is indicating a lot of strength in the United States of America. The crypto market is quite robust right now. The stock market is quite strong. And so, as a result of this, Donald Trump is once more increasing the strain on Jerome Powell. Refusing to lower borrowing rates, he claims it is unjust for America. And I believe Donald Trump is beginning to make a point here. I mean, you look at Europe, you look at China, they're doing it. Jerome, what is the hold-up? What are you waiting on? Frankly, many individuals have many various ideas about why that is. I mean, I'd love to read your guys' opinions in the comments down below. Still, in the end, I believe we can all agree that some rate reductions are due. The market is robust. We're prepared for a fantastic rally